So the market's cooling off. Interest rates are rising. The cap rates for self-storage are beginning to rise. Hello, this is Mark Helm, and the market is changing, and you're going to hear all types of predictions and statements from the experts in the self-storage industry, but perhaps none is more misunderstood than the way people banter around and use the term cap rates. So what does it really mean, and why is it important for the smaller investor in today's world, either getting in the self-storage business, who owns facilities, or if you're a seller of self-storage and want to sell your self-storage facility? Why is cap rates, what is it, and why is it so important, especially today? So I would be remiss if I didn't give you a definition of a cap rate, so let's do that now. A cap rate, or a capitalization rate, is the rate of return a real estate investment will make based on the projected income and expenses of that particular piece of real estate. Okay, that's done. We did that. Now let's look at what it really means for us, the smaller investor in the self-storage world. So we use it as buyers and sellers to put a value on a self-storage facility. In my opinion, it's one of 2 or 3 ways that as a buyer of self-storage you should be using. And it's not even the primary way, but it is the way that the industry experts are always talking about and comparing investments, one self-storage facility to another. So let's really dig deep into it. So if we were to talk to an appraiser about putting a value on a piece of real estate, any piece of real estate, an appraiser would tell you there are 3 methods that every appraiser uses to put a value on a piece of real estate. Method number 1 is the comparable sales approach. Method number 2 is the income approach. And method number 3 is the replacement cost approach. And a good appraisal will usually have valuations using all 3 methods of valuation. But the appraiser will also tell you that depending on what the real estate is, they're going to put a lot of weight on one of the methods to come up with the value. So for example, on your home, if you're to get an appraisal on your home or have an appraiser put a value on your home, they are going to heavily weigh the comparable sales approach. What other properties in your area are selling for is of primary importance to determining the value. They'll make monetary adjustments for the differences, but that is how the value is derived primarily for homes. Now, for income producing real estate, which a self-storage facility is, the appraiser is going to heavily weigh on the income approach. So using the income approach to determine the value, an appraiser is going to put a value on the income stream that self-storage facility generates, and to determine the value, what will a ready, willing, and able buyer pay for that income stream in today's market. And how they do it is whatever the capitalization rate is, or whatever is the rate of return that a ready, willing, and able investor will expect for that income stream, that is what the cap rate is that they use to determine that. So don't worry, we'll dive deep into it in just a second. So in today's market, as cap rates start rising, that's good news for buyers and not quite as good news for sellers. Why? Well, let's take a look. So here we are at the computer, and let's take a look at a fictitious self-storage facilities numbers. Now, to use a cap rate to determine value, one first has to get at what is the real net operating income. That's a critical number. And here is the simple formula for determining the NOI, or net operating income. And that is income minus operating expenses equals net operating income. In other words, the income that facility produced in a given time period, let's say a year, minus the operating expenses in that same time period, that is the net operating income. Now, operating expenses are all of the expenses it takes to run that facility, like the property taxes, the insurance, the payroll, the light bill. It does not include loan payments, and it does not include capital expenses. In other words, anything that's amortized, like HVAC replacement, or blacktop, for example, would be considered an operating expense. Replacing and resurfacing would be a capital expense. So we have the formula on how to generate a net operating income. Now let's look at a fictitious facility, and let's say that that facility generated $1 million in income. It had $430,000 worth of operating expenses. That means that the net operating income for that facility is $570,000. So what you want to do is to determine the value using a cap rate. What you're really doing is you're answering the question, what will a ready, willing, and able buyer pay for that $570,000 income stream? Said another way is, how much can a buyer pay for the $570,000 and get the market rate return that income stream is generating? Well, let's figure it out. So if you don't know what the market rate return is, do what I did. I asked an appraiser. And what the appraiser told me was, well, a few months ago, 6-8 months ago, it was for the mom and pop type facilities, the smaller facilities that small investors like us tend to purchase. The cap rate was going around 7.25%. But as interest rates begin to rise, he said, it looks like it's going to move closer to 8%. Maybe, he said, I would use today, let's say 7.75%. So remember, if you were paying all cash for that fictitious facility a little while ago, what could you pay for that $570,000 that would generate a 7.25% cap rate? Well, let's take a look. Cap rate 7.25, net operating income 570. Here is the math to get to that number. You take the 570 and you divide it by 0.0725, and that gives you a number of $7,862,069. In other words, you could pay that $7,862,069 for that $570,000 cash flow and get a 7.25% return. That is how you use a cap rate to determine the value of a self-storage facility. But we said a little while ago, cap rates are going up. So let's look at that. Let's say that we're using a 7.75 cap rate instead of a 7.25. How does that affect the value of this fictitious self-storage facility? Well, again, the net operating income is $570,000. And if you take 570,000 divided by 0.0775, that gives you a number of $7,354,839. So there you go. For a difference of 0.5% in cap rate, that's worth $500,000 in value for this facility. So just a 0.5% move, or if you want to be real fancy, you could say a 50 basis points, 0.50%, a move of 50 basis points in cap rates for this income stream is worth $500,000 in value. That's how you use a cap rate to determine the value of a self-storage facility. So there you have it, 0.5% difference in a cap rate in today's market for that fictitious storage facility. 0.5% difference equates to $507,230 difference in value for just 0.5% on a cap rate. Imagine if cap rates go up 1%, 1.25%. Can you see that the market cap rate or the market capitalization rate has a huge impact on what the value is of your self-storage facility or the self-storage facility you're buying? So this is the best way for the small investor to relate to and to use cap rates, whether you're looking at the value of your own self-storage facility or if you're looking for the value in acquiring a self-storage facility. But I caution you to remember, cap rates are just one way of determining the value. And if you're a smaller investor getting in the self-storage business, I don't even think it's the best way. It's just a way. I use that as a secondary method to make sure I'm not overpaying, and all the methods I use should be fairly close to each other. But that's one way of using cap rates to determine the value of a self-storage facility today. Now, if you don't know what the cap rate is, again, call an appraiser and ask them. They'll be happy to tell you. If you connect with an appraiser, does any type of appraising of self-storage facilities, they'll be able to tell you what the cap rate or the cap rate range is in today's market. But when I'm using the cap rate method to put a value on a self-storage facility, especially one that I'm looking at to acquire, I spend the majority of my time determining what the real net operating income is. Because whatever number you use for that NOI, that's going to have a huge difference on what the value is, isn't it? So you see these emails from many brokers. Sold 5.25 cap rate, sold 6.15 cap rate. You know, in fact, I've done this. I will email them in some instances and say, cap rate on what? Was that a cap rate on what your number was in the package in terms of what the net operating income was? Was that a cap rate on the last year's net operating income for the facility? Was that a 6.15 cap rate on the buyer's projected net operating income? What was that a 6.15 cap rate of? That would make a big difference, wouldn't it? So really, the key to putting an accurate value on a self-storage facility using this cap rate method is to get at what is the real net operating income going to be for me. And I'll promise you, 99.72 times out of 100, it is not going to be the NOI that's in the marketing package. You've got to put your expenses in. Even if you're not in the business yet, really project, what are your operating expenses going to be? What are you going to pay your manager? Do you have money in there to buy paper clips and paper and toner for your copy machine? What is the real net operating income going to be? Spend most of your time getting to that number, then applying the market cap rate is a very simple process, as you see. So using the cap rate method to put a value on a self-storage facility is something that as investors we do every day now. Hopefully you have a better relationship to cap rates now and you have a better understanding and way to relate to them. But here's my coaching. Buy smart, buy strategically, but if at all possible, buy. Why? Because the sooner you get in the self-storage business, the sooner you will begin to create the wealth and the fulfillment that being in the self-storage industry offers. The sooner you put your first self-storage facility into service is the sooner you'll be creating true wealth and fulfilling career in the self-storage industry. Thank you. My name's Mark Helm, and I'll see you soon.